This is a story of revolution and redemption, a tale of obscene wealth and power. This is the truth about the Bitcoin billionaires. By now, the origins of Facebook are pretty well documented. Mark Zuckerberg meets with Tyler and Cameron Winklevoss about being the developer for their new social network idea. Mark agrees to help them build their websites, but ends up stringing them along for months whilst he secretly starts working on his own social network. When the twins realize what's happened, they sue Zuckerberg for stealing their idea. Years later, the hugely successful Hollywood movie about Facebook's origin would be set around this legal battle. But have you ever wondered what happened next? Well, eventually the Winklevoss twins, or the Winklevoss as they're often known, were offered $1 million settlement by Facebook. Their lawyers urged them to take it. However, whilst it was a vast amount of money, the Winklevoss twins said they wanted payment in Facebook stock. Instead, their lawyers couldn't believe it and tried to convince them to take the cash and run. However, for the Winklevoss, this wasn't so much about the money. They were from a wealthy family already. Facebook was a multi-billion-dollar company by this point, and they knew it had even more growth to come. So they at least wanted a piece of it. That decision to get paid in stock instead of cash turned out to be a very good move. When Facebook had its IPO, the Winklevoss shares became worth $500 million. But there was one problem going up against Zuckerberg so publicly, like this had ruined their reputation. They were now regarded as a bit of a joke in the media. And in the Facebook movie, they came across as pretty spoiled and entitled. Zuckerberg seemed like the genius who'd actually made Facebook, whilst many felt they were just dumb jocks trying to cash in off his work, as Zuckerberg himself put out. You weren't the first people to have an idea for a social network, and neither was I. Friendster and MySpace existed before Facebook, and the last time I checked, Tom from MySpace isn't suing me. And it's pretty true. Ideas are cheap, execution is everything. So basically, after the case closed, the Winklevoss had ended up with a lot of money, but most of the world viewed them as losers. Now ask yourself, what would you do with $1 million? Go travel the world, buy some expensive sports cars or mansions. Well, the Winklevoss twins had a completely different plan. They wanted to use that money to invest in other companies. They wanted to prove they weren't just dumb jokes, and instead tried to make a name for themselves and change the narrative of their story. So they went to Silicon Valley and decided to become angel investors, were made by shares in startup companies they believed could be even bigger than Facebook. But something very interesting started happening when the Winklevoss found a company to invest in that they liked the look of. They'd make an offer, but their offer would always get turned down. Now, sure, if this happened once or twice, it's normal. The companies might have already found other investors, but over and over, companies were turning down the Winklevoss investment money. Eventually, they confronted one of the founders and asked, "We've made a really good offer. Why are you turning down our money?" As it turns out, once again, their problem was Mark Zuckerberg. You see, back then in Silicon Valley, many founders viewed their endgame as selling their business to Facebook, or at least partnering with them in some way. And it was widely known that Mark Zuckerberg would never buy a company if the Winklevoss twins were involved. As a result, their money and presence had become toxic. People just didn't want the Winklevoss twins associated with their company. This realization was devastating, and that the twins were unsure where to go from here. This was a new low, so to get away from it all, they went to Ibiza. One night in Ibiza, the Winklevoss twins were a club trying to distract themselves, but they couldn't enjoy it. They were too busy thinking about what their next move would be. They knew they wanted to do something meaningful. They wanted to prove themselves, but how they clearly weren't having fun in the club. So they got up to leave. It was a sunny day in Ibiza. The Winklevoss twins, towering at 6'5", were enjoying the lively atmosphere when a stranger approached them. His name was David Azar, and he had a story to tell that would change the twins' lives forever. As he pulled a dollar bill from his pocket with a smile, he said, "A revolution." David spoke of Bitcoin, a new digital currency that was shaking the foundations of the financial world. The twins were skeptical but intrigued. Bitcoin was only a year old, and its creator, an enigmatic figure named Satoshi Nakamoto, had vanished without a trace. Yet David's passion was contagious. He described how Bitcoin was decentralized, without middlemen like banks, and how it could potentially upend the global financial system. It's digital money, but it's more than just money. It's the future, he said. The twins listened closely. With their Harvard economics background, they understood the potential. Bitcoin, like gold, was scarce, durable, portable, and difficult to counterfeit. But unlike gold, it could be divided into tiny fractions and easily transferred across the globe. There was something revolutionary about it, yet the price fluctuated wildly, and its dark association with illegal activities made many people wary. David's company, BitInstant, helped people buy Bitcoin easily, something that was difficult back then. The Winklevoss twins weren't sure if it was a scam or a true opportunity, but they decided to take a chance. They invested millions in BitInstant and began buying Bitcoin themselves. They were early adopters, securing a massive stash of the cryptocurrency when it was valued at just a few dollars per coin. Little did they know, they were about to witness a wild ride that would change everything. The first signs of Bitcoin's potential came after a crisis in Cyprus. The country's banks had collapsed, and to save themselves, they began seizing citizens' savings. This news sent shockwaves across the world. People realized that their money wasn't safe in traditional banks. Bitcoin's price surged as more people looked for an alternative. The Winklevoss twins, who were already heavily invested, saw the value of their holdings skyrocket. But Bitcoin's rise wasn't without its challenges. The twins soon found themselves at odds with Charlie Shrem, the founder of BitInstant. While the company was growing rapidly, Charlie was neglecting his duties, partying, and ignoring the business's needs. The twins, ever the meticulous investors, saw the cracks forming and tried to steer Charlie in the right direction. However, their advice was often met with resistance. The tension between the Winklevoss twins and Charlie grew. As the price of Bitcoin soared, the wild west of crypto was becoming more chaotic. Charlie's company ran into trouble when it lost its legal license and was forced to shut down. Worse still, Charlie was arrested for his involvement in money laundering related to the Silk Road, an online black market where Bitcoin was used for illegal transactions. The twins were devastated by the fall of BitInstant, but they knew that Bitcoin's potential was still massive. They saw an opportunity to take control of the market. The collapse of BitInstant and the infamous exchange Mt. Gox, which had been hacked, left the Bitcoin world in chaos. But the Winklevoss twins didn't give up. They decided to create their own cryptocurrency exchange, Gemini, aimed at bringing order and regulation to the Bitcoin market. Their vision was clear. Bitcoin needed a regulated platform to thrive and reach the masses. Gemini was launched in 2015, and the twins worked tirelessly to make it a trusted exchange. Their focus was on compliance, security, and making Bitcoin accessible to the general public. Their commitment paid off, and over time, Gemini became one of the most regulated and reputable exchanges in the world. They had successfully positioned themselves as leaders in the Bitcoin revolution. Meanwhile, Bitcoin's price continued to climb. In 2017, it reached an all-time high of nearly $20,000 per coin, and the Winklevoss twins' early investments made them billionaires. Their vision had paid off, but the question remained, was Bitcoin just a bubble, or was it truly the future of money? The twins remained unwavering in their belief that Bitcoin was here to stay. They had weathered the early storm, survived the chaos, and were now on top. But they knew that the journey was far from over. In fact, it had only just begun. As the world increasingly embraced cryptocurrencies, the Winklevoss twins expanded their empire. They moved into NFTs with Nifty Gateway, and today they're champions of the Web3 movement, advocating for a decentralized internet that gives power back to the people. Thanks for watching today's video. If you found this content valuable, don't forget to hit that like button and subscribe. Got any questions or thoughts? Drop them in the comments below. We love hearing from you. Take care.